Joining us now is Dr. Sajjid Chinoy, JP Morgan's chief India economist, and also someone who serves on the advisory council to the 15th Finance Commission. Dr. Chinoy, really appreciate your time. The 2025 budget is very, very crucial. How do you think the finance minister will be able to balance the fiscal consolidation and goals with the need to boost economic growth? And what, according to you, are the implications for fiscal policy of India in the upcoming budget?
Thank you, Maria. You're right. I think this will be a delicate balancing act because there are multiple objectives that need to be fulfilled. I think the point to realize is post-pandemic in most emerging markets, public debt has gapped up. And in the last couple of years, you've seen India's debt move up slowly. And therefore, it's important that we remain on a fiscal consolidation path for fiscal credibility and to preserve macroeconomic stability. At the same time, we've seen a bit of a growth slowdown in the last few quarters. And so conventional economic wisdom will tell you that fiscal policy needs to be counter-cyclical to support growth. So I think the key will be to strike a balance that we do need to bring deficits down in the medium term to stabilize public debt. But the pace needs to be gradual so that fiscal policy is helping the economy at the margin. Now, there are many other things I think the finance minister can do. One is the composition of expenditure is important. One hallmark of recent budgets has been that we've had a significant improvement in the quality of expenditure with a big focus on infrastructure. And I think it's important to keep that momentum going because that's the way eventually to crowd in private investment. And while everybody is very focused on the fiscal math, I think what's important to recognize is the policymakers have a lot of instruments outside of fiscal policy. And the finance minister spoke about several initiatives in the July budget. There was measures to introduce employment-linked incentives. It'll be important to see, how that's panning out and maybe to augment and refine that. There was talk of a new economic policy framework. There was talk about structural reforms working with states, a review of the customs duties, a review of income tax, reimagining India's financial sector. So there were lots of really encouraging, important initiatives that were started in July. And I think taking some of those to their logical conclusion will be important. And this way, what one can do is, the fiscal math may have to be conservative for macroeconomic stability. But to the extent that the budget speech introduces more reforms and more initiatives that boost sentiment, that will help growth at the margin.
Dr. Chinoy, what are your expectations in particular for inflation in the coming year? And how do you think the RBI will respond in terms of monetary policy, especially given the global economic uncertainty?
I think what's been very encouraging in the last few months is we've seen food prices come off. This is not just vegetables, but other food prices as well. This will come as a huge source of relief because you had a series of food price shocks over the last couple of years. We already know core inflation has been very soft in the last year. So with food prices coming off now, there's an expectation that in the coming months, headline inflation, CPI inflation, which is what the RBI looks at, will be back in the 4% handle, around 4.5% for the foreseeable future. And this will give the central bank, much more room to ease monetary policy. But I think one needs to think of this holistically. If you think of monetary conditions in the economy, it's not just interest rates, but it's also liquidity. And it's ensuring that India's currency does not become uncompetitive when other currencies are depreciating. We've already begun to see steps on the latter too, that we've seen the RBI has been more permissive of rupee depreciation, which I think was important to preserve competitiveness. So that policy is undergoing change. We've seen just earlier this week a significant injection of durable liquidity through a variety of instruments by the RBI, which was important again to ease monetary conditions. And we expect that there will be some monetary easing in 2025. And I think that balance is important because if fiscal policy at the margin is tightening, then the focus will be on monetary policy to stimulate growth. And all of these instruments will have to work in harmony. Policy rates, liquidity, and a currency to ensure that they're all reinforcing some easing. We've begun to see signs of that. So the fact that inflation is coming off will give the central bank many more degrees of freedom.
The big concern, of course, among the taxpayers is that will they get some relief? Do you think the government has the elbow room to navigate that space? And can they provide some relief, tax relief to the middle class?
Well, we'll wait and see what specific initiatives the budget announces, but I think there has to be a recognition that at an aggregate level, at a meta level, when deficits are going down, that means that fiscal space is constrained. Because if you're easing taxes at one margin, then that has to be made up somewhere else. So we'll wait and see how that happens. I think the composition of expenditure is important. I also think, multipliers matter. So if there is to be relief, if that relief is targeted more to the bottom of the pyramid, from a fiscal multiplier perspective, those things have more efficacy. But we'll wait and see, how this plays out.
Okay, my last question to you as we build up to the budget by Finance Minister Nirmala Sitharaman, her 8th one tomorrow. What are your 3 wishes that Finance Minister should mention in the budget speech?
No, I think it'll be doing a disservice to the Finance Minister to bring what is a very complex policy document and a lot of competing objectives into just 2 or 3 things. But what I will say is there were some really important, encouraging starts that were made in July. I think making India's growth more labor intensive is going to be crucial to employment prospects in the coming decade, given India's demographic transition. And therefore, I think the employment linked incentives, the skilling incentives, the internship incentives were very good starts. It'll be good, I think, to evaluate how that's going, refine and augment them where necessary. So I think the focus on job creation in July, it'll be good to continue on the momentum. The finance minister also spoke about, factor market reforms and working with states. I think this is very important at a time where, the global backdrop is very hostile. Everybody is very focused on the near-term impacts of President Trump. But I think what's equally clear is that if you do get into a protracted US-China trade war, then the perceptions of multinational companies to diversify away from China are going to get only stronger and only more acute. And so when they're looking for alternative destinations in the coming years, it's very important that India be waiting and willing and ready to accept that investment. And I think the best down payment we can do to be ready and to be competitive is to continue with persistent structural reform. So I think if we, the budget has been, in the last few years, fiscal marksmanship has been very good. I have no doubt that we will do everything to protect macroeconomic stability. But if we can continue the initiatives where we're focusing on structural reform to improve the economy's competitiveness and make it more attractive to foreign companies, as well as focusing on making growth more labor intensive, I think that's a lot of work, but really important objectives in the coming years.
Dr. Chinoy, I really appreciate your time. Thank you so much.